See, we talked about it a little bit before, and you told me that right now you're trading professionally, so for other people and getting a salary for that. And you've also been trading, I think, getting like part of the profit in the past. So how did you get the money to trade exactly?
Um, well, this is a problem that every trader must face, and it's funny because oh, 3 years ago, 2 years ago, I did a very large live class, and I did it for about 200 people at that point in time. And it was funny because 2 years later, everybody was coming back to me and saying, Steve, it took me 2 years from the time I started your class to now, and now I know how to trade, but I don't have any more money. And the woman that I did the webinar with, she was commenting on that as well too. By the time traders learn how to trade, they've run out of money because the educational process of learning to trade is so expensive. If you think about it, you start off with a demo account, even eventually you got to put real money on the line, and that's when everything changes, right? So this is a major problem for every trader out there. And the answer is not an easy one, Etienne, because if you go back 4 years ago, maybe 5 years ago now, it used to be pretty easy to get money. And back then, we had proprietary trading firms that were allowed to take a small deposit from you and then give you exponential capital. And after the Dodd-Frank Act came to be, basically 90% of those prop firms that were out there, they shut down. And it was a real shame because a lot of those prop firms were very legitimate. They didn't just give you the money to trade, but they also taught you to trade, and they also monitored your trading very strictly. So in other words, if you put $5,000 with them, they would not allow you to lose more than $100 or $200 in a day, and their platforms would shut you down. So when the Dodd-Frank Act came to be and it shut down all these, I would call semi-good prop firms, meaning that you did have to put up capital, but they gave you real training and they gave you risk control, which was really super important. There was a way for most traders to trade. Now, ironically, what happened was it forced all traders to go to high leverage products like the Forex market. Because most traders, if you want to throw around, if you want to make, let's say, $10,000 a month, realistically, you need to be trading somewhere in the area of $500,000 worth of capital. I mean, you just need to be able to have that capital, not to be overly margined, right? If you're overly margined with poor risk control, then you're going to blow a large account. So it's important you understand the background because it brings us to where we are today and why today is so much worse and so much more difficult for so many traders, because they don't have access to capital the same way we did even 5 years ago. And before that, it was pretty easy to get money if you had a decent track record or if you were willing to go through some decent training. So what has that brought about? Well, what that has brought about is a tremendous amount of education on the market that is not qualified from people who are putting their own money up to train you, right? Because if I'm training you and you're paying me money, but I'm not giving you my money to trade, I don't really care too much about the quality of education, right? But back in the day, the quality of education was super high because, yes, you were putting money up, but I was giving you my money to trade. Now, there are a few companies out there that are quote unquote educational companies, they are saying that if you pay for their education, they'll give you money to trade if you can prove a long enough track record. Now, when you see those companies, I want you to run away, because that, for the most part, 95% of those companies are complete and utter garbage. They'll say they're going to give you money, but they never give you any money, right? And maybe they'll give you money, but their requirements are so high, and without proper risk management basically built into the system, the average starting trader is just going to make too many money management mistakes, and they're never going to get that money anyways. So basically, it's just a scam or a front for paying for education, right? So where does that leave traders? You know, I hate to say this, but most of you guys are just screwed.
We'll try to be positive, but yeah.
I'm going to just tell it to you the way it is. I mean, it's not like it used to be. Now, hopefully, you know, I'm actually very encouraged. Hopefully, Trump, one of the reasons why I was a supporter of Trump is because of deregulation. So in the short-term future, maybe some of the deregulation will come out of the Dodd-Frank Act, and maybe companies who actually you may have to pay to educate you, they may actually be able to fund you for real and give you the proper risk metrics. So if you think about what really makes a successful trader in this business, like I started the whole conversation, after 2 years of training, people finally start getting it. And what is it do you think that they get the most? What do you think is the main thing that they get the most, in your opinion?
You mean for what exactly?
Yeah, I mean, what do you think when after they quote unquote arrive at a point where they are semi-consistently profitable in trading? What do you think that one thing is that they do that it takes them 1, 2, 3, 4, 5 years to do?
I would say it's kind of scaling things up. So once you are profitable, you need to add more things over time and increase your capital over time.
It's a good answer. It's not the right answer though. The right answer is risk management.
Right.
Okay. People, what they end up doing is they go through all these different things only to find out that a lot of them work and a lot of them don't work. Some work better than others, but for the most part, when they figure out that they're risking too much money on every trade and they're not controlling their risk after losing trades, that is what takes 2 years to 3 years to 5 years to figure out, really. But they keep jumping to the next thing, the next thing, the next thing. So here's the point. Let's say you have a $5,000 account. Even if you are using 200 to 1 margin on Forex, you still cannot risk more than $25,000 on a trade, right? With leverage. I'm talking buying like 0.25 lots at the most. Even that is too much. More like 0.10 lot. So how do you make money? Which is kind of the whole theme of this whole interview. The only thing that you can do, and I really want to encourage people to really forget about making money. Honestly, it sounds crazy, but focus on your Sharpe ratios and your Kelly ratios. They should be the number one things. If you don't know what they are, you can Google them. They should be the number one things that you're paying attention to. And why is that? Because even if you have a $5,000 account and you can show proper risk management, meaning that over a very large sample size, you will not draw down more than you are making. So I like Kelly ratios more than Sharpe ratios. I just personally like them. And my Kelly ratios is somewhere around 1.75 to 1.85. So what that means is that over a very large sample of trades, I am never drawing down too much. It means that for every dollar I'm risking, I'm making $1.75 or $1.85 back. So what do your listeners do that want to make a living? Put a solid track record in for 1 to 2 years. And the shorter your background, it might even take 3 years. Now, if you can show a solid Kelly or Sharpe ratio for 1 to 3 years, depending on who you are, your experience, your background, money will start to come to you like you would not believe. Okay, I'll give you an example. I've been able to take an audited spreadsheet, right, walk down the block to a local Edward Jones. You know who they are? They're like a wealth management company. You know, in every city, there's always some financial planners, right? I've been able to walk down the block to an Edward Jones office, go and talk to 4 or 5 of their agents and say, hey, look at, I got this track record right here. Do you think you can find some clients that might want to put up money to trade with me? And if it's audited and you can show it, they're going to be tripping over themselves, right? I mean, that's just an example of what you can do when you have an audited statement, right? But I think the problem is that everybody's out there trying to make money. They're not trying to become good traders, right? So anyways, it's a very, very long answer to a very simple question, but it requires a lot of explanation because stop trying to make money, guys, okay? That's not how you're going to become rich. The richest people in this industry are those that manage other people's money and those that make commissions. There's no individual trader that is rich, per se. It's when you manage other people's money that you become extremely successful in this business. So focus on not the results in your $5,000 account. Focus on how can I take the results of my $5,000 account, produce enough of a verifiable track record that other people want to give me their money. That's the short answer right now. That's really the only answer.
And I think that's powerful. I really like this example you gave that just walking in a in a company and getting money or showing a track record. That's pretty interesting. We have a couple of people who joined us since we started. So we have Jeffrey, welcome. NTV Game and Timur, welcome, guys. So we're going to answer your question. If you have any question, post them in the chat. One thing I want to put some attention to is, so NTV Game is saying he's trying to build a track record right now. That's his main goal. And he's at the point where the thing he wants to do is to trade only for himself. Do you think, because some people have different goals. Some people, they want to trade only for themselves. Some people want to trade for other people. How do you decide to trade for yourself or for other people?
Well, like I said, I've been doing this for 37 years right now, and I don't trade for myself, right? For a couple of reasons. First of all, it's so difficult to, you better have a very large account. You better have $1 million, $500,000, not $50,000, $100,000. That ain't gonna cut it. You're not gonna be able to successfully sustain the life, because it's theoretically what's gonna happen. Let's say you even have a $100,000 account. Now let's say you have a good month, you make 5%, 10% on your money. So you just made $10,000. Well, guess what? What do you think's going to happen the next month when you only make $1,000? And what do you think's going to happen on the third month when you lose $500? So now you've had a profitable month of 5 to 10,000. You've lost 1,000, or sorry, you've made another 1,000. So you're, let's say, 6,000, and now you lost $500. So in 3 months, you've now brought in an income of $6,500. Give me a break. That's very, 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 very normal, right? Now, in the 4th month, if you're a good trader and you have a good edge, you might make $20,000, right? So it will average out to be, yes, I'm making $7,000 a month, but the way that you're going to get there is going to be so difficult. So what do? Right? Everybody's got mortgages, car payments, fiancés, trips, children's orthodontics, medical bills, all kinds of living expenses that we all need. It's so difficult. You better have $300,000 just in reserve and $200,000 to trade with, because the ebbs and flows of the reality of income that comes into this business is just going to put too much pressure on you to do it any other way. So the only other answer is if you have another source of income. So if you have another source of income that you can live off of, then you can trade for yourself, because then you're not dependent on that paycheck at the end of every month, right? Which is super, super, super important. It's really why I teach. The only reason why I teach, to be very honest with you, is because it provides me with another source of income, which relieves the pressure of trading, which in turn makes me trade much better. Ironically, excuse me, ironically, when my education business is suffering, my forgive me, my trading business is suffering. And I'm stressed out about money, and I can't trade well. When I can't trade well, it magnifies itself. Very, very few people have the ability to, have the ability to trade well when the pressure's on. And those bad months, those bad weeks, those bad days, those even bad quarters, they're gonna come. So you better have a source to live off of. So that's really the only way you can really trade for yourself.
Yeah, and that's really, really honest advice. So I really appreciate Steve sharing this himself, and I can say like it's totally the same thing for me. And I've seen the month where I don't trade well and have a bad month everywhere, and it's not good. So definitely good to to have that, of course, second income. And that second income doesn't have to be a job, like a boring job where you go to work every single day. It could be something else. That's
Yeah,
totally fine.
absolutely.
Find what you like. Yeah. Have you
Absolutely.
maybe seen some example of people like what they do on the side apart from
Yeah,
trading?
I'm sorry.
Do you have example of other people like what they do on the side of trading?
Yeah, I have several students right now that work and trade at the same time. So one guy's a waiter, so he has shift work, so he's able to be at the market more frequently. I have an Uber driver, a Lyft driver. They do jobs where they are able to come and go as they please. I have other traders that I'll teach them how to trade during the Asian session, right? So you just have to be flexible. You don't want to put yourself into a position where, listen, there have been many times in my life I've had $250,000 lying around, and I said, screw it. Why am I giving a 50 split or a 30 split or a 70 split to these investors, right? They're a pain in my ass. They bug me all the time. They're always on me for performance. I'm just not going to do it. And I've tried to do it, and I lose that money so fast, it's not even funny. Because like I said, all you need, you can have 3 good months, and all of a sudden, boom, your daughter needs orthodontics, and that's like a $20,000 bill. So now you got this huge bill that comes out of nowhere, and you're gonna try to make that money from trading, and that's not gonna work. Some other jobs that I did personally that you can think of is I actually played poker. Okay, and I would play poker. I trade from 9:30 to 4. I jump in my car, go to the casino, play poker from 6 o'clock till 11 o'clock, and then all weekend long. So I actually had 2 sources of income that were coming in, and I traded fantastically during that time because, again, I didn't have to rely on one. I had the other one for a backup.
Totally, yeah, totally agree with that. And I can relate to the fact that the time where I traded the best was when I had a job from like whatever 9 to 5 or 6 to 4, and I was working all day and
Yeah,
coming back straight home. So that's that's interesting.
absolutely, and that's why. Um, you know, you're not a professional trader unless you have an income, and that's why I'm actually doing what I'm doing. The only way I'm going to get out of prop trading is basically to go and work for somebody who's going to pay me a salary, right? And if
Hmm.
you can do that, if you can find a way, again, if you can build a track record and you can go and find 3 or 4 personal investors, and you can say, I need to I need to get a salary. I'm not going to take any money out of the account. I'm going to leave all of my profits in the account. You guys put up the money. I'll work for the salary. It's going to be a small salary. I'll get by. And that's how you build great wealth, even as an individual trader, because you've got enough money to pay your basic expenses and the pressure's off of you. You can trade smart, you can trade intelligently, and you can focus on performance as far as not how much money you're making, but your percentage returns. And that's what we should always be focused on, is our percentage returns.
Wonderful, wonderful.
Okay.
That's giving me
Can be
the
family members too.
yeah, cool. So,
Yeah.
what are the typical terms that you can expect or get when you trade for other people? And we'll get you guys' question after that. There's a lot to cover, but what are some of these terms that you usually get when you trade for other people?
Typical terms. Okay, yeah, that's a good question. As much as you can. um, Stevie Cohen from SAC Capital, who you may be familiar with, when he was hot, he was getting 50%, right? And he was managing billions, but he's a red hot trader. He's a rock star. I mean, this guy was averaging, 8% to 10% a month. I mean, that's rock star trader, right? So he was getting 50%. If you're starting out at a typical prop firm, so one thing I do want to talk about, there still are legitimate prop firms out there, okay, that will give you decent training and also finance you. They're rare, very few and far between right now because of regulation. There's one big one in Toronto, by the way. There's a couple in Quebec also. If you live in Canada, it's a little bit easier, and if you live in Europe, it's a little harder. United States, it's almost impossible, but in Canada, you can actually get into these prop firms. And the thing is that you usually have to go to these firms and get trained on location. And then what they'll do is they'll start you out with a $400,000 account. My firm that I work for will take a trader. You'll go through their training program, which is usually 2 to 3 months. They'll start you out with a $400,000 account, and they'll give you a 45% split. You get to keep 45%. Now, that might sound wonderful, but they're going to limit how much you can lose on any day to $200 when you start out. So the most you can lose on any day is $200. You might have 400,000 to throw around, but they're only going to allow you to lose $200 on any given day. They shut your account down. So there are, I think, 3, maybe 4 legitimate prop firms that will give you their money for real. But again, you have to show at least a 1-year track record in order to get into those prop firms, to go through their training programs. And that's what I do with my students. That's what I have. A lot of students that are in the same boat that many of your readers or many of your listeners are. And I say, look, give me 1 year of an audited track record with a controlled Kelly and a controlled Sharpe ratio, and I will get you the interview at the firm. I won't guarantee they're going to hire you, but I will get you the interview at the firm. But then you better be ready to move to Toronto, or there's like a couple in Montreal. You better be ready to move there for at least 3 or 4 months to go through that training period. There's a couple in Europe as well too. I've kind of lost track with the ones in Europe, but there are 2 in Europe. Actually, my company has a couple in Europe as well too. I wanted to talk about that because there are still legitimate prop firms, not in the United States though, but in Canada and Europe.
Cool. And in line with that, where do you find the people who can pay you a salary to trade? That's a question from Marcel.
Again, these days you got to be creative, right? The other thing that I really want to stress to people about how you can really transition is, if you're young, let's say you look like you're what, 30, 26 to 30?
Yeah, 23.
22?
23, yeah.
23, perfect. Sorry, I apologize. You're very mature for your age. If I was 23 years old, I'd put together, again, a solid track record. Focus on your performance, not how much money you're going to make. Really focus on your drawdowns. Really focus on controlling loss. Look for strategies that are going to teach you how to lose well. That is what I do, ATN. I teach my students how to lose very, very, very well. And occasionally win big. That's the secret sauce. Lose a little bit and win big when you can. Now, put together a solid track record. There are several institutions like Goldman Sachs, Deutsche Bank, Bank of America, several Canadian banks, several international banks that have proprietary trading divisions. And if you're young, even without an education, if you've got a solid track record, and I'd say anywhere below 27, go and put your resume with that track record as an entry level to the proprietary trading firms in those companies. You will be shocked how many will actually give you an interview. You would be shocked. And there's probably, I don't know, in Canada alone, there's at least 6 to 7 big banks that will give a young guy or girl with a good track record in no education. That's the beauty of this business, guys. I dropped out of high school. I missed my grade 12 diploma by 1 credit. You know what it was? Ironically, it was math. And I went and got a job in a financial industry simply because I was willing to take an entry-level position. You know how fast I moved up? I went from messenger to a stockbroker in 3 years. You got to get your foot in the door. But the only way you're going to get your foot in the door is either have a family connection or walk in with a track record. They will listen. Believe me, this business is about money. Money talks. Doesn't matter what you look like. Doesn't matter if you're female or male. If you can show control, loss, and exponential growth, money will rain down on you. Don't worry about making the money. Worry about your performance and how you're going to show people that you can get it. The other thing you can do is, like I said, walk. I remember at one point in time, I went down to a very wealthy street in my city when I was living in Mississauga, and I had a bad couple of years, went through a divorce, I was out of money, and I literally knocked on people's doors, and I said, here's an audited track record. I can make you this amount of money. It sounds really corny, but I swear I actually knocked on probably 150 doors, and 2 guys listened to me. Out of 150 people, I said, what are you getting as a return right now? And they said, well, I'm getting around 13, 14% a year. I said, if I can make you 35% a year, 40% a year, how much money do you think you could raise for me? And they look at you crazy at first, because you pretty much are crazy. But believe me when I tell you, if you can prove it, and what investors really want to see, low drawdown and nice returns, right? Doesn't have to be crazy stuff like the industry is telling you, 200, 300%. Throw that out the window. That's nonsense, garbage. It ain't going to happen. Focus on 5%, 2%, 3% a month. If you can do those types of numbers, believe me, finding money is not going to be a hard enough time if you can prove it over a large enough sample. That's important.
I love it, love it. And this is Oleg was asking, when you look for a track record, you look for real or demo. I think this is pretty simple. You look for a real track record, like a real account, a live account.
Yeah,
I don't think people
absolutely.
can trade demo and have a track record, but yeah. And
Listen, I don't think a demo account's that bad, right?
yeah, of course, of course.
Yeah, I spend a lot of time on demo accounts. You might laugh at me, but I have lots of demo accounts because there's a lot of times I'm trying new things out, right? And I'm adding different different edges to what I'm already doing. I'm tweaking what I do. And so a demo account has a place. If you can do it on a demo, it means you can do it on a real account. So don't discount the effectiveness of a demo account. It's important. But yes, you do need a real account.
And Timur has some really great questions, 2 questions. So yeah, do you have anything to add, Steve?
Sorry, I lost you there for a second. I got you back now.
Okay, cool, perfect. So Timur has some good questions. So two good questions. He wants to have your opinion on a track record of making 5% per month on average for 2 years.
How would that be?
Yeah, is that yeah.
Yeah, again, you really have to focus on your Sharpe ratios and what a smart investor will look at is they'll look at and they'll say, okay, if I gave you $100,000 right now, in the past, would there be any time that your consecutive losses would have lost a lot of that money, right? So that's what that's a little secret that you should really pay attention to. Think of yourself as saying, imagine you have $100,000 and you're giving it to Etienne to trade. Now, he shows you a track record, but during that 1 year period, there was a 3-week period where he lost, let's say, 25 trades in a row that exponentially went higher. Well, if I gave you my $100,000 again today, and that 3-week period happens again, that $100,000 might drop down to $60,000. Then it's going to take me so much longer to get my money back. So it isn't necessarily the net 5% a month that matters. What matters when you're building your track record is to be able to say to an investor, look, at any point in time that you give me your $100,000 based upon my strategies, based upon what I'm doing, you will never be in any great danger from any big drawdown immediately. You might go through a 2, 3, 4, 5, 6% drawdown, but you're never going to go through a 10% drawdown or a 20% drawdown, not on one trade. This is a really important thing. Over a losing streak. That's what investors want to see. An intelligent investor will want to see, if I give you my $100,000 and he has a bad period, what's the worst case that's going to happen right now? So too many people, they're focused on 5% a month on average, but there's nobody that does that in the real world unless you're like Stevie Cohen or or one of the greats that have been able to do that. But even they have periods of extended losses, right? So that's what you want to focus on when you're building a track record. Listen, if I walk up to you and I say, look at Etienne, in the last 3 years, you give me $100,000, and based on what I'm showing you right here, your money's never really going to be at risk for more than a 3-month period, 4-month period. And even in a worst case, you might go through a 5%, 6% drawdown. You're going to feel a lot better about taking a net 50% a year return versus me saying to you, look, Etienne, I'm going to make you 100% a year, But if you give me $100,000 right now, you might drop down to $50,000 before the year is over and go over it. So really important. That's key, 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 key. Don't just focus on the averages. Focus on smoothing out the drawdowns.
Yeah, yeah, really, really important. And I think you have to remember that people are always risk averse. They don't like risk.
Right.
So, Timur's second question is: do you have any tips on how to manage risk? Because this is a topic that we talk about a lot. So, any tips on how they can manage risk better?
Yeah, absolutely. It's very simple. It's math.
Okay.
It really is just math. It's really that. It's really just math. It's one of the major components in my education. It's really the holy grail of trading. Um, there is, you can all give it away for free right now, but you can Google, use the Kelly criterion. Okay, if you follow the Kelly criterion, you will almost never, ever, ever go broke, and you'll have the most smoothest equity curve, and you'll be able to raise millions of dollars if you follow it on every trade. I spend a whole, I spend a lot of time on getting my students to use it correctly and use it effectively. But the true holy grail of trading, and for those of you that came to this live webinar, um, don't let anybody else tell you anything else. If you want to be a successful trader, follow the Kelly criterion, and I guarantee you, you will never blow an account again, and you will have the smoothest equity curve that you could imagine that can raise a ton of money. So I teach that specifically, how to use that effectively. I have some techniques and how to do that. But if you just want to Google Kelly criterion, build a spreadsheet on that. It will help you tremendously from where you are now.
Wonderful. And we have some more questions that we can answer, but I know Steve, you told me you were discounting your course or your program for my listeners. So maybe you can tell them a little bit about that and what that's about.
Sure. So what I'm doing right now for Desire to Trade people, specifically and only for you guys, well, obviously other people might watch this on YouTube, but anybody that's in the Desire to Trade group, usually, as you know, Etienne, I've charged as much as $10,000 for my coaching per person. But lately, the market has been getting so saturated with such garbage education for so cheap, and so many people are being fooled by this garbage education, that basically just flooding the market, right? And I'm not going to single anybody out. I'm sure there's good education out there, but there's just a lot of subpar education. So the only way I can compete with that is to either lower my price or do more people. And I trade for two reasons. Number one, I trade because, as I told you, it brings in a supplemental income, which helps me actually trade better, right? And even though I'm managing money right now, I'm taking a small salary. I'll be totally honest with you guys. I'm taking like $7,000 a month. That's all I take, right? I have to live off of that, right? And you're talking to a person that even if I make $50,000 for my investors, I'm not taking that money out, right? I'm not taking my percentage out. I'm leaving it in. I'm taking a very small salary just to pay my bills. So I educate people because it brings an extra income, which obviously is wonderful, right? And so the only way I can bring in extra income is lower some prices right now because of the number of educators that are out there. But also, I truly love helping people, right? There is nothing more wonderful for me in this industry to be able to help people, and I've helped so many traders. It's not even funny. I have over 400 people on Skype that I stay in touch with every day that are thank you, Steve, and send me trades and blah blah blah. Anyways, because of that situation, I'm able to take a $10,000 course, and I'm going to offer it for a 2-week period only. You got to sign up in the next 2 weeks at $999. Okay? And what it's going to involve is it's going to involve one-on-one coaching with me as a group. So we're going to start a Skype group for everybody that comes in at $999. I'm going to put everybody into one group, and every Sunday we're going to spend an hour and a half together, me teaching you, and then you're going to send me homework during the week. But there is one condition to this. I need at least 10 people, right? I need at least 10 people to sign up, because how do I go to one of my old students and say, hey, I charged you $10,000 and now I'm going to charge somebody else $999? I mean, that's not fair, right? But the only way I can do it is to put you in as a group, so that you won't get the specific single attention that somebody gave me who paid $10,000, but you'll still get all the information that I gave them and some personal attention. That's the only fair way that I can do it, because for me, whether I teach one person or 30 people, it's the same amount of time. And that way I can say, hey, listen, I gave you, an ex-student, a lot of time. I'm giving, yes, I'm charging these new people a lot less, but in all fairness, they're not getting as much time. They're getting the same information, but they're not getting as much time, right? I think that's the only fair way I can do it, right? So to your people, please sign up. It's a once in a lifetime opportunity to get, probably, I'm going to toot my own horn here, but there's just nobody else more qualified than me. There's just nobody else that's been in the industry for as long as I have and done the number of jobs in the industry: stock broker, floor trader, prop trader, and more importantly, had the length of time of success that I have had, right? And in this business, it's all about who your mentor is and passing down information in the right way. You know, again, I'm not knocking anybody else, but I'm saying at $999, it's a tremendous bargain of a lifetime. I'm going to catch a lot of flack from this from my existing students, but oh well.
And I think you do start with a free session, a free coaching session, if people want to see if it's a good fit for them and everything. So that's great. That's great.
Yeah, sure. Just go to my website and there's a free Skype 1 hour. And that really isn't a coaching session. It's just for me to talk to you and develop a game plan for you, if you will. Okay. So
wonderful. And we'll have the link below the video for that. I know there's an option, I think, for Desire to Trade. So pick that one. Otherwise, you'll have to pay the whole price. And that's not the thing we want for you guys, of course.
Yeah, wonderful. Make sure you click the Desire to Trade thing. But listen, it's going to be great. I love group coachings as well too. They're more fun for me, but you're going to learn a tremendous amount of things that you've never ever seen or learned before. Everything I do is very, very different than everything you've learned. Let me assure you of that. And there's a definition of insanity, Etienne, is that the true definition of insanity is doing the same thing over again and expecting a different result, right? And if you're not getting the results you want, if you're not getting to where you want to be as a trader, it's one of two reasons. Number one, your money management sucks terribly. That's the main reason. And number two, what you're doing isn't working, right? And most of the time it's number one, but how well number two works is going to be dependent upon how well you implement number one. So you not only do you have to know how to trade, but you have to have a methodology of trading that makes your money management easy. Do you understand what I'm trying to say?
Yeah, totally. Yeah.
You have to have a methodology. Like, anybody can give you good money management. You can go follow Kelly Criterion. But if, for example, Kelly Criterion only works when you trade a lot. It doesn't work when you trade sporadically, right? In other words, if your Sharpe ratio is 1 to 5, What that means, if you're risking $1 and you're making $5, chances are you're losing on 80% of your trades, but it's okay because you're risking $1 to make 5. So you have to match up your education with your money management. You can't just take random money management like a Kelly criterion and be trading it in the wrong way. It has to be adjusted. So the real secret to success in this business is finding a methodology that, number one, you can believe in. Really, really super important. Number two, a methodology that you can apply in real time based on your time constraints, based on your budget. And number three, a money management that complements 1 and 2. It's tricky, right? It's tricky. And that's what takes so many people such a long time to figure out. They really have takes a lot of time, trial and error, different things, scalping, swing trading, position trading, investing, options, Forex, all these different things. It takes them a long time to put that combination of things together.
Mm-hmm. Yeah, totally agree. And that's where the power of a mentor or a coach really comes into play really strongly.
Thank you.
Yeah, and I totally agree with yeah.
That's where experience matters, because that's where you're going to come to me and you're going to say, hey, Steve, listen, I can only trade for 3 or 4 hours a day. What should I do? And I'm going to tell you exactly what you're going to do based upon what your outcome is. If you can only trade for 3 or 4 hours a day, but you want to go work at a prop firm, I'm going to develop a plan specifically for that. If you want to work 3 or 4 hours a day and you want to be a swing trader, we're going to develop a plan for that, right? And if you want to work, if you have 8 hours a day and you want to be an options trader, we're going to develop a plan for that, right? And that's where experience matters the most.
Wonderful. A couple of quick questions about the program. Morocco Trader News is asking, what exactly do you trade? Is this only good for stocks or only futures, or is it good for, like, what is that good for?
That's an excellent question. The answer to that question is really simple. When you understand, and we talked about this in my last interview, if you want to go and watch my last interview with Etienne on Desire to Trade, when you understand how I like to use the word players, professionals, smart money is what I'm trying to say. When you understand smart money, the people that have been doing this for 100 years, 200 years, 50 years, corporations, right, that move 90% of the volume, when you understand what smart money really does, you can trade anything, right? Some things are easier than others. Stocks are much easier than Forex, but it works on options, it works on stocks, it works on Forex, because I understand how the people are making money. And then when I see them doing things, I just join them. It's really that simple. Yeah.
Wonderful. That
So
applies.
it works on everything.
Cool. And how long is the course?
We'll do a total of I'd say 7 to 10 weeks, depending on how long everybody takes to really understand the information. So we'll do 7 to 10 weeks. How quickly everybody learns, probably 10 weeks. And every week I'll teach you a lesson. And then every week you'll send me homework. So the classes will be Sunday for 1.5 hours. And then you'll send me work at the end of every week. And then when I go through it, I'll check your work, I'll ask you questions, I'll test you. And then assuming that you've got it, we'll move on to the next important concept.
Wonderful. And I like that this is really result oriented, not only focused on like how many videos or how many modules, or really about the result, and that people get the concept and then they apply them over time. So much more powerful.
Absolutely. I mean, if you don't get it, I gotta spend time, making sure you do get it, right? And you having the feedback is really important. Steve, I don't understand this. What does it specifically mean? You know, that's really super, super important, right? Some people will move faster than others, so we have to be a little bit patient when we're doing a group class. But you know, it should work out fine.
And you guys, if you have any other question, comment below, and we'll make sure to answer them. But I totally know Steve is not the person who's gonna tell you like how to use a moving average and what period to use and like all these boring things that you see everywhere. So it's gonna be things that you can apply for sure in the market. Definitely.
Yeah, absolutely. Go and
Wonderful.
watch my videos, guys. You won't. If you guys watch my YouTube videos, you'll see. You won't see any patterns or indicators on there or anything. What I'm doing very specifically is that over the years I've learned what floor traders do. I've learned what market makers do. I learned what algos do. I learned what institutional bank traders do. I've learned what mutual fund investors, traders do. I've learned what they do at Goldman Sachs. I've learned what they do at Deutsche Bank. I've learned what they do at all these different professional firms. And I teach you the real things that they do. I teach you how to look for what they're doing based upon the actual price. Remember, they can hide everything but price. So when you know how to look for the existence of smart money in the market because you understand what they do, then there are hundreds of ways to exploit it, whether Forex, options, stocks, various different ways that you can exploit that information. Various different time frames you can exploit that information on too.
Wonderful. And I know for myself, whenever I think about investing in a coach or in a program, and I like still these days I do. So that's really important, I think. But whenever I want to invest, there's always a price coming up and the issue of cost. So what would you tell people who think that $9.99 is too much?
Yeah. I forget his first name, but his last name is Bach. I think it's Anthony Bach. He says, if you think education is expensive, try ignorance, right? And, it's, you're going to pay a lot of money one way or the other. Let me guarantee you of that. Either the market's going to take it from you, right? Or a good mentor is going to take it from you, right? I have no doubt in my mind that if people really want to learn how to trade, you don't have to pay anybody. All you really have to do is sit there, turn off all the YouTube videos, don't even listen to me or anybody else, and just watch price go up and down for a year on a 1-minute chart. And you're going to see so much behavior in that market and repeatable things happening. But the repeatable things that people are trying to teach you right now, for example, patterns and flags and pennants and head and shoulders, these are all retail patterns, which may have some power on a larger time frame. But in today's world, we live in a world of algos. And 90% of the volume is done through machines these days. So the emotions are gone out of the market. All that stuff that all these indicators and all this stuff that's out there right now that people are telling you work, they may work in penny stocks, maybe, because there's still people in penny stocks. They may work on larger time frames because mom and pop are making decisions on larger time frames. So that may work. But on the smaller time frames, it's totally algo driven. So you have to know how smart money makes decisions, and you have to look for those repeatable events and how they are doing things by understanding what they're doing. So if you think that it's expensive to get educated, you're going to pay one way or the other. You might as well pay me because I'm just going to save you a tremendous amount of suffering and pain. I'm not going to guarantee you're going to make money. I'm not going to do that. But I am going to guarantee I'm going to shorten your learning curve from 5 years to 1 year. And I'm going to do it shorter. I'm going to 5 years to 3 months. At the end of 3 months, you are going to know more about how markets work than 99.9% of the people out there. Why? Because I've been there. I've done the jobs. I've worked in these places. I've worked with the people that have worked in these places. I've spent 37 years in front of these stupid screens. I'm almost blind right now and deaf. Anyways, so you're going to get out of life what you pay for, one way or the other, right? Anyway.
Yeah, yeah. And I'm kind of laughing because I don't know how much the university costs in the US, but in Canada, like a semester is maybe for 12 weeks, like $3,000 something. So that is less, and like you finish and you get nothing. Like you don't know what to do after. So it's kind of funny. Yeah, much more expensive than a coach, and yeah, for sure, which is stupid a little bit.
Yeah,
But
I mean,
yeah,
listen, I wouldn't do this for $1,000, but if I can put 10 people, 12 people, 15 people together, I win, you guys win, and more importantly, my best. If you go and search on me online, you will not find a negative comment. Maybe one, actually two. I think there's two out there. I've taught over 300 people, and there's only two negative comments about me, right? And that's it.
yeah,
And so, I mean, that speaks volumes. I've been doing this for a long time, and not a lot of people don't like me, but nobody can say, "Oh my God, I took Steve's coaching and I hated it." No, what you'll get is Steve's jerk sometimes, a bit of a pain in the ass sometimes, but his coaching is excellent because it's just so wide in what I teach, right? As far as depth of experience goes.
wonderful. Rylan is asking, will you teach us swing trading, so end of day, for those who work full time?
Yeah, absolutely, absolutely, sure. I mean, I'm going to teach you. I'm going to teach you basically what you need to know to be able to design your future, right? Whether you want to go and work at a prop firm, I can help you get there because I'll teach you what you need to do in order to work at a prop firm. If you want to manage your own money, I'm going to teach you what you need to do to manage your own money. I don't recommend it, but I'll teach you how to do it. If you want to go in and raise money for other people, I'm going to teach you exactly the metrics. That's really important because each thing is different. You have to take a different approach to do different things because different people are going to, different institutions and people and investors and prop firms look for different things, right? And so, yes, I'm going to give you that personal attention where you're going to be able to ask me questions and I'm going to be able to answer them in detail for you.
Nice, nice. And just to remind people, this is not like a course where you go through all the like the modules in 2 days and you're done. Like this is a whole transformation. And the first step, if you want to sign up, is to schedule a call with Steve, because that's where you're gonna see whether it's a good fit for you and whether you're ready for that. So link is below in the description, and I think you guys cannot miss it. I think it's gonna be clear. So Tamer is asking, can we join prop firm anywhere in the world, or do we need to trade from their specific location?
Um, for the most part, you're going to have to go to their location, but let me preface that. If, again, it all depends on your numbers. If your numbers are good, I work remote, right? We have an office in Toronto that I go to, but I don't ever go there. I go there like once every couple of weeks just because there's I like to talk to the other traders and I like to find out how other people are doing. So I go into the office and I talk to them. Hey, how you guys doing? You know, what's the market like for you guys? What are you doing? Anything new? So I actually go into the office and talk to them once every couple of weeks. But for the most part, it's funny because I go in through Team Viewer. People think that's hilarious. I actually trade my prop firm through Team Viewer remotely at home. So they have a computer set up at the office. I log in through Team Viewer, and there's a bit of a lag, but for the most part, it works just fine, right? So the answer to your question is, if your numbers are good enough, you can work from anywhere in the world, anywhere you want. For the most part, they'll ask you to go in for about a 3-month period where they'll they'll want to make sure that they're looking over your shoulder and kind of monitoring you. But once you put the numbers in for 3 months, you basically can write your own ticket. I work what I want, how I want, the days I want, where I want. Like, yeah, I have to give them, a big chunk of my income, and my prop firm is 51% to go to them. I only get 49%, and I'm a big producer, and but it's worth it to me, for the fact that I don't really have to. I can set my own rules, really, as long as I don't have like a 3 month bad period.
What if people are intimidated or kind of scared of this 12, like 10 session program? Is it something that requires a lot of work? Like they have to work all day at that thing, or not necessarily?
I didn't hear it exactly.
So,
Somebody's scared.
yeah, so people might be scared that this is going to be too long, and like 10 weeks is going to be long. Do people have to do a lot of work that's involved with that program, or not that much?
Um, if you want to be a successful trader, yeah, you're gonna
Yeah,
have to work hard,
agree. Yeah.
right? I'm gonna drive you. Listen, what I did was I emulated a prop firm trading, right? I've been through prop firm trading, and it's lasted 3 months in some cases, 4 months in some cases. So I've emulated it so that you don't have to go into the office. You can get the trading from me over the internet right now, right? So I'm, it's like, I want you to think of it in the right way. It's literally like going to boot camp. Like what's that thing in the army where
Yeah.
they go boot
Yeah,
camp?
the boot camp. Yeah.
Yeah, boot camp. It's like that. I'm gonna drive you so hard during that 10-week period. I'm gonna put so much pressure on you because I have to keep the pressure on. If you think I'm hard, the market's going to be 10 times harder than me, right? So, but at the end of the day, can I force you to do things? No. But am I going to try to force you to do things? Yes. I'm going to be on you like white on rice. I'm like that, that Full Metal Jacket guy. Private in your face, get down, give me 20. I'm like that. They call me Sergeant Steve. And I have to be like that because that's what would happen if you went and worked for a real firm. They would not be delicate on you. They would really try to get the homework in, get these. Why didn't you do this? Why didn't you do that? It's the only way to do it. I'm giving you 37 years, actually more than that. I'm giving you like 150 years of trading knowledge that was passed down to me, that was passed down to people, that was passed down to people. 150 years of trading knowledge, I got to fit into a 3-month period. So it is going to be intense. It's not hard, right? You don't have to be a genius. You don't have to be mathematically inclined, but it is hard, meaning that it's demanding, right? And I'm going to demand it from you because if I demand it from you, when the market will be able to perform.
Yeah, love it, love it. And I think that's the whole principle. You have to work hard, and you end up with a transformation over time, which is really, really powerful. It's not something like you go through, and that's the thing with things like courses that you go through, like the videos you just watch, and then you wonder like what to do after. So I see the power of coaching like really, really here, where like you see the lessons, but then you know exactly like what to work on, what to apply, and that is powerful, definitely. And someone's saying no pain no gain. Exactly, I think that's the principle. The more you learn,
Yeah.
the more you earn. Yeah, totally right,
I mean,
totally
listen,
right.
I'm a student myself, right? You guys got to remember, you're never going to stop learning. Don't think
Oh
you're
yeah.
going to come and take my class and this is going to be the end of your learning, right? It's not the case at all. Um, I'm going to teach you enough to make you really knowledgeable so that you can know what to learn next. The problem with all the retail traders out there is they don't know what to learn. So do I learn Fibonacci? Do I learn footprint charts? Do I learn options? Do I learn market profile? Do I learn moving averages? Do I learn swing trading? You don't know what to learn. So what I do is in that 3-month period, I teach you, this is what you have to focus on. Yes, the fundamentals are super, super important, but you have to learn them in the right way. You can't just go and start looking at data releases and expect to learn fundamentals, because you have to know how to apply those fundamentals. Yes, you have to learn price action, or what I call order flow. It's super, super, super important, but you can't just go and look at some random things about order flow. You got to look at order flow when it comes to from an institutional viewpoint, right? Liquidity, where are value, where are people, how do I spot institutional activity in the market so that I can join it? So it's one thing to know that you've got to learn, but it's another thing to be in an industry filled with a bunch of stuff that 90% is useless and know you've got to learn. So what I do is I condense it all down, say only this 10% of stuff is what institutional smart money is paying attention to. Focus on what they're paying attention to. Avoid the other 90% of stuff out there, because it really does not affect anything except for, I don't know what it affects. It makes educators rich and makes brokers a lot of commission. But that's not what's important. Even when I show you the 10% that you got to focus on, you're going to spend the rest of your career learning about that 10%.
Yeah.
But at least you won't be wasting 90% of your time on things that don't matter.
Yeah, totally right. And that's called wasting time, and you don't want to have that, because time is much more valuable than money anyway. Yeah.
Exactly.
Cool. So guys, I've put the link below once again, and I also put the email address from Carolyn, which is with Steve. If you guys have any questions, just email her. She's going to be able to answer your questions. She's really nice, and that's going to be useful. And yeah, let's see. Cool. So we'll wrap it up here, guys. Thanks for watching. And if you have any question, also just let me know, and I'll see you next time.
Also, I just want to encourage you guys, remember, I do offer a free 1-hour Skype consultation. Yeah, it's free. How much better than that can you get? It's free, right? You know, here's the thing, Etienne, I just want to leave on one note.
Sure. Go ahead. You're going to have the last few words.
Yeah. Listen, there's a lot of people out there that will tell you what you want to hear about this business. Remember, we're selling greed. I'm an educator, right? If I want to, guys, I can do what they do. I can say, I'm going to make you 500%. It's going to be really easy. It's not going to take much time. You're going to be able to do it from a beach in, in Florida. It's not hard. You don't need a lot of money. And I can show you examples where I've taken $1,000 accounts up to $10,000 accounts. I can show you lots of those if I really want to, right? But all it would be doing would be satisfying your need for what you want to hear, right? It wouldn't be telling you what will actually happen to you when you do this, right? And it's kind of like, people ever heard the statistics in the fitness industry, Etienne? By chance?
Which one?
Like those home gyms or those treadmills and everything.
Uh-huh.
Do you know that people buy those and only 3% of people actually use them on a regular basis?
Oh, yeah, I'm sure.
Yeah, 97% of people, it just sits there and collects dust, right? How many of you guys have done that, right? So why is that important? Well, trading is the same way. People buy things in this industry because they have a desire and they have a need, right? But to become Mr. Olympia, you got to use the equipment, right? So having the desire and the need is not enough. I'm the guy that's telling you, you got to get on that treadmill. I'm the guy that's telling you the things that are the reality. Well, everybody else is just telling you what the final outcome is. I'm telling you how you get to the final outcome. And it's not a pretty journey. It's a journey that can be done, and you can make it fun, but it's still a journey that there's no substitute. There's nobody that's going to get you from here, fat guy at 195 pounds, 50 pounds overweight, to Mr. Olympia in one thing. There's a middle part. And it's the same with trading. All you people are out there buying the treadmills and the weights because you like the idea of what trading is. But I'm the guy that's going to take you from the idea of what trading is to the reality of being successful at it. And there's a lot of stuff in between that we got to learn and go through, right? We'll get there, but we're going to go through it piece by piece by piece. I tell you the middle stuff. Everybody tells you the final outcome. I should tell people the final outcome more often, but just goes against my conscience.
That's totally right. Totally right. And you need to invest in yourself at some point. And I do the same, like continually, which is really important. Thanks guys for watching. We appreciate, and we'll catch you pretty soon.
We went way overdue in time, but thank you again, Etienne. Appreciate it.